The timing is interesting. You know, I've been asking myself, and I haven't seen a single story on this. Were the weapon shipments that were going to Ukraine from the U.S., were they stopped because of the shortage of heavy rare earths coming from China? That is my provocative question here for you as we begin a new week here. Hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli. A provocative question to get us started here, but it's a legitimate one. And weirdly enough, I have not seen a single story asking this question. It may be out there, but to me, this is what I'm thinking all week. Interesting timing. Could be random. Who knows? Pure speculation. We might even say audacious speculation. So let's see what we can determine in this 7-act drama called The Last Week. First, very circumstantial evidence, but I did want to add it to our mosaic of stories. After saying last week that weapon shipments to Ukraine would stop, then yesterday, on Monday, July 7th, Trump says U.S. will send more weapons to Ukraine, but then let's look at the fine print. Quote, "We're going to send more weapons. We have to. They have to be able to defend themselves. They're getting hit very hard now. They're getting hit very hard. We're going to have to send more weapons, defensive weapons primarily." End quote. He said at the start of a dinner with Israeli Prime Minister Benjamin Netanyahu. So let's not run to too many conclusions here. But defensive weapons to me sounds like jamming devices. Does that sound like missiles? Right? And I think missiles potentially, and this is pure speculation, but we do know that samarium, one of the key rare earths that China has cut off, are used at the tips of these missiles, at least according to the articles we are reading here from credible sources. So that is circumstantial evidence piece number one. But it gets more interesting. July 3rd, which was 5 days ago, so Thursday last week, China's foreign minister dismisses European worries over rare earths. And this is Reuters via mining.com. China's foreign minister downplayed European worries over rare earth export restrictions on Thursday, saying it was standard practice to control, and here are the key words, dual-use goods exports, but that Europe's needs would be met if applications were submitted. Wang Yi was speaking in Berlin during a joint news conference with his German counterpart on the second leg of a European tour seeking to lay the groundwork for a summit between EU and Chinese leaders later this month. And what we've learned recently is that rare earths and critical minerals are at the very top of the agenda for the EU. But we have another quote here and more clues from Wang. Quote, "Rare earths have not been, are not, and will not be a problem between China and Europe, or between China and Germany," end quote. Wang said, quote, "If legal applications are submitted, Europe's and Germany's normal needs can be met," end quote. It continues, China, which controls over 90% of global processing capacity for rare earths, German Foreign Minister Johann Wadepool said restrictions were causing, quote, "great concern," end quote, and tarnishing China's image in Germany as a reliable trade partner. Quote, "We're on a path to finding sustainable joint solutions that will bring the necessary détente," end quote, he said. But when Wang was asked if an agreement could be reached on restrictions ahead of the EU-China summit, he said, quote, "This is not an issue between China and Europe. Controlling dual-use goods is standard practice. China and Germany both have the right to do so," end quote. The Chinese Ministry of Commerce already has a fast-track procedure in place to ensure that normal approvals are processed as quickly as possible, he added. So you hear all the qualifying language here, and if you read between the lines, you could argue that this is all about military applications. If you want to keep building your cars, we have no problem. And then we have another story from aa.com.tr. China's Wang says rare earth exports won't be a problem with Europe. We have more evidence with other quotes. As it says here, speaking at a joint news conference with his German counterpart in Berlin, Wang emphasized that it's China's sovereign right to impose controls on rare earth exports. However, he stressed that China doesn't see this issue as problematic in its relations with European partners. quote, "Rare earth elements are classified as dual-use items. Therefore, necessary export restrictions must be introduced," end quote. Wang told reporters, explaining that these materials can be used in both civilian and military applications. Quote, "This is part of our sovereignty and also common practice internationally. By implementing these measures, we are fulfilling our international responsibility, which serves the interest of world peace and stability," end quote, he stressed. So quite interesting. I also came across an article from the Associated Press, which was trying to determine what in fact was agreed upon between China and the US in their recent deal, where we've had very murky information. So I dug up this story from June 28th, Associated Press. US-China announce a trade agreement again. Here's what it means. As it says here, what did the two sides agree to? U.S. Treasury Secretary Scott Bessent said Friday that the Chinese had agreed to make it easier for American firms to acquire Chinese magnets and rare earth minerals critical for manufacturing and microchip production. So, as it says here then, Chinese magnets and rare earth minerals critical for manufacturing and microchip production. But it doesn't say military use, so the word manufacturing is ambiguous. But I think we can triangulate from what we saw Wang say in the EU press conference, that manufacturing means commercial use, not military production. So at best, it is unclear whether rare earths, including samarium, for military production is in fact being shipped. It is unclear. And based on the surrounding evidence, I would submit that in fact, it looks like they are still not being shipped for military purposes. So, again, I raise this provocative question, which I find odd that has not been asked anywhere that I could find, which is there a relationship between weapons being sent to Ukraine from the United States stopping and this restricting or cutting off of heavy rare earth supply for military purposes, seemingly, to the United States and Europe, who are both passing mega budgets for military spending? What is that going to amount to if you don't have the minerals you need to build your, trillion-dollar militaries? Now, another interesting piece of the puzzle, we have a story from Reuters July 3rd. Siemens says U.S. has lifted chip software curbs on China, Bloomberg News reports. So Reuters reporting on a Bloomberg News report, and it's just one line. Siemens has received a notice from the U.S. government saying that export restrictions on chip design software for China have been lifted, Bloomberg News reported on Wednesday. So export restrictions on chip design software have been lifted. So it seems pretty clear that that was part of the give and take in these negotiations. Now we have another huge development, something we've been discussing here and speculating on since at least December. And here's the headline. This is Reuters. Why China's ultimatum to Myanmar rebels threatens global supply of heavy rare earths. So we're back to Myanmar and the importance of Myanmar in the heavy rare earth production. And this is an exclusive from Reuters, July 8th, which is today. The global supply of heavy rare earths hinges in part on the outcome of a months-long battle between a rebel army and the Chinese-backed military junta in the hills of northern Myanmar. The Kachin Independence Army since December has been battling the junta over the town of Bamo, less than 100 kilometers from the Chinese border, as part of the civil war that erupted after the military's 2021 coup. Nearly half the world's supply of heavy rare earths is extracted from mines in Kachin State, including those north of Bamo, a strategically vital garrison town. They are then shipped to China for processing into magnets that power electric vehicles and wind turbines. China, which has a near monopoly over the processing of heavy rare earths, has threatened to halt buying the minerals mined in Kia-controlled territory unless the militia stops trying to seize full control of Bamo, according to 3 people familiar with the matter. The ultimatum issued by Chinese officials to the Kia in a meeting earlier this year, which is reported by Reuters for the first time, underscores how Beijing is wielding its control of the minerals to further its geopolitical aims. One of the people, a Kia official, said the Chinese demand was made in May, without detailing where the discussions took place. Another person, a Kia commander, said Beijing was represented by foreign ministry officials at the talks. So what we've seen here since the rebel takeover of this rare earths mining hub, as it is called, is China getting increasingly involved in the situation. It continues, Reuters could not determine whether China had carried out its threat. Fighting in the region has restricted mining operations, and rare earth exports from Myanmar have plunged this year. China spooked global supply chains this spring when it restricted exports of the minerals in retaliation against U.S. President Donald Trump's tariffs. It is now using its dominance to shore up Myanmar's beleaguered junta, which China sees as a guarantor of its economic interests in its backyard. China's foreign ministry said in response to Reuters' questions that it was not aware of the specifics of deliberations with the Kia. Quote, an early ceasefire and peace talks between the Myanmar military and the Kachin Independence Army are in the common interests of China and Myanmar as well as their people. End quote, a ministry spokesperson said. A senior Kia general did not respond to a request for comment. The Kia official, who spoke on condition of anonymity to discuss sensitive matters, said Beijing also offered a carrot. Greater cross-border trade with Kia-controlled territories if the militia abandon efforts to seize Bamo, a logistics hub for the junta that's home to some 166,000 people. Quote, and if we did not accept, they would block exports from Kachin State, including rare earth minerals, end quote, said the official, who did not elaborate on the consequences of an economic blockade. So, it's all circumstantial evidence. But again, when you look at the timing of all of these matters, one could speculate even further, and perhaps we'll limit our speculations here. But kind of an interesting question. Is Myanmar impacting Ukraine indirectly? Is it all connected? So we'll stop our speculations there, and thank you for humoring me, but interesting connecting points between these far-off regions. Let's continue. There is an opinion piece in the Financial Times that just came out today by Chris Miller. China's weaponization of rare earths is a new kind of trade war, and subheadline, the country's latest sanctions are proving far more effective than prior efforts. So all to say, this rare earth thing is working. We have another headline. This is Reuters via mining.com. How China tightened its grip over its rare earth sector, an interesting story on how the Chinese rare earth industry was consolidated in the last 10 years. Another interesting extract. This is Chemistry World. Military demand strains metal supply chains. This is the 19th of June. But what I wanted to highlight here was a question I brought up last episode, which is how fast can the West create a rare earths processing alternative? Here is an extract from Chemistry World. For some elements, there are no existing competitors. Quote, China has a 100% monopoly on heavy rare earths, says Tom Morenhout, an expert on critical minerals at Columbia University in New York. Quote, we can't find alternative supplies in the short term, so they will be coming from China for the next 5 years. End quote. So here is a critical minerals expert out of Columbia saying it's going to be another 5 years. Another story, rare earth magnet users jolted into paying premium prices for ex-China supply. Very interesting story. So here is an alternative supplier. This is Reuters on July 1st. For years, Rahim Suleiman had reached out repeatedly to automakers and other potential clients to market the rare earth magnets from the plant his company was building in Estonia, one of just a handful outside dominant producer China. But after April 4th, when Beijing imposed new restrictions on the super-strong magnets used in electric vehicles and wind turbines, and I believe robotics, among many other applications, Suleiman retired his sales pitch. He didn't need it anymore. Ever since China's export controls tightened some rare earth exports to a trickle in the midst of a trade war with the United States, causing chaos in supply chains and some auto plant shutdowns, quote, the phone is ringing off the hook, end quote, said Suleiman. Companies starting new plants in Europe, the US, and Asia had previously reported difficult talks on deals that embedded the higher costs to make magnets outside China, which benefits from cheaper labor costs and economies of scale, as well as government support via tax refunds. But the crisis has led many customers to soften or drop objections about paying those premiums as they scramble to hammer out deals, according to a dozen industry participants, including automakers, magnet makers, rare earth producers, consultants, and government officials interviewed by Reuters. While rare earth magnets from China are beginning to flow again, customers remain on edge about the threat of future shortages. Suleiman's company, Neo Performance Materials, launched output of permanent magnets at its Estonia plant in May. Now he said, quote, "Everybody wants to talk about how they can satisfy their demand out of our facility," end quote. He said he has no worries about lining up enough customers who will pay a premium, $10 to $30 per kilogram, with EVs typically holding 2 to 4 kilograms of magnets per vehicle, over the price they usually pay for Chinese magnets. Output at Neo's factory in Estonia is starting small, providing samples to its first customers, which Suleiman declined to identify. German auto parts supplier Schaeffler told Reuters it is a customer of the plant, but declined to comment on how much it is paying. In Korea, customers of Novatech, which produces magnets in China, are prepared to pay 15 to 20% more for magnets made in Vietnam. A company source told Reuters, adding there was, quote, "a growing sense of crisis among customers," end quote. Britain's Less Common Metals, one of the few firms outside China involved in a key step of rare earth processing, making rare earth metals and alloys, says it is battling to cope with new inquiries. Quote, "Now post-April 4th, it's like someone stuck a cattle prod into the whole industry," end quote, said Grant Smith, its majority owner and chairman. He said LCM has held discussions with numerous companies that use magnets as they seek alternative supply sources, though he declined to name them. The firm now has plans to expand into France and other countries. So pretty interesting on the front lines, and just a few more headlines as we wrap up our introduction. And we have a wonderful show today with Novagold CEO Greg Lang on the recent buyout of Barrick's stake in the Donlin project in Alaska. So that is super interesting. As I mentioned to Greg in the interview, this is a project I've been seeing on the peripheries of the Northern Miner website since I began working there in 2012. So Novagold has finally, with the help of Paulson and Partners, has bought out Barrick's stake in the Donlin Gold project in Alaska. Very interesting discussion. Also coming up this episode, we have a spotlight with FM's John Nelson, who is principal engineer of mining and molten materials for this week's spotlight. So a wonderful discussion on what is happening on the processing front. So just a few more headlines here as we wrap up. Financial Times. China snaps up mines around the world in rush to secure resources. That's got to turn some heads. Hopefully. I mean, really, that is the story of the last 15 to 20 years. And this is Camilla Hodgson and Leslie Hook and Edward White at the FT. This is the subheadline: Deal-making hits highest level since 2013 as groups seek raw materials that underpin global economy. So this is the most they've been accumulating resources since 2013, when they were also buying up everything. And we saw it firsthand here at the Northern Miner. We saw it all firsthand. We watched it happen. And did policymakers care? Unfortunately not. There was no concern. How things have changed 12 years later. And here is just a quote from Michael Scherb, founder of private equity group Appian Capital Advisory, who said there had been, quote, "more activity in the past 12 months because Chinese groups believe they have this near-term window. They're trying to get a lot of M&A done before geopolitics get difficult," end quote. Interesting take, and it kind of rings true, doesn't it? And here's another interesting quote from the article. John Mayer, an analyst at corporate advisory firm SP Angel, said that China had been making deals, quote, "to actively keep the West out of certain critical materials which they dominate," end quote. Every time someone gets close to mining lithium, the Chinese come running with a checkbook, end quote. Very interesting. Another big story here, this is the Financial Times. Mining boss calls for price support to challenge China's critical minerals dominance. Sibanye-Stillwater chief executive says suppliers to Western nations need, quote, "level playing field." This is also by Leslie Hook at the Financial Times. Western governments should provide price guarantees for critical minerals miners if they are to compete with Chinese rivals who receive huge state support, the boss of leading platinum producer Sibanye-Stillwater has said. You know, when I brought this up 5 years ago on this podcast and in interviews, it was largely dismissed. But it's hard to see any other solution. And nobody wants subsidies. But if you can't compete and your competition is being subsidized, I mean, you have to ask yourself, how important are these minerals? The comments by Neil Froneman come as industrialized nations have become alarmed by China's dominance in the production and processing of critical minerals, but have stopped short of setting prices for raw materials or creating a joint buying program. Quote, they have to level the playing field for us as mining companies, end quote. Froneman, chief executive of the Johannesburg-listed platinum and battery metals producer, told the Financial Times. Quote, if we mine for the US or even Europe, we should be guaranteed certain prices so that we get the right returns, end quote. And just finally, quote, we recognize that the world was going to deglobalize and polarize around the East and the West. And we specifically chose not to be a contract miner for the Chinese like so many miners are, end quote, said Froneman, who has led Sibanye since it was formed in 2013. Sibanye has received some government support for specific projects, but Froneman called on the US and Europe to do more. Quote, we incur higher costs and we have higher costs of capital. There needs to be some form of support to make us competitive, because the model is that it's a Western world capitalist system. Shareholders require returns, end quote, he said. So that, my friends, is the landscape here, a ton going on, as usual. If you want to find us online, you can find us at northernminer.com. You can find us on X at northernminer. You can find us on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify and Apple Podcasts. And with that, let's turn to John Nelson, FM's Principal Engineer, Mining and Molten Materials, for this week's Spotlight. Join us today. I'm very pleased to welcome to this week's Spotlight, John Nelson, FM's Principal Engineer, Mining and Molten Materials. John, welcome to the show.
Thanks, Adrian. It's great to be here.
It's wonderful to have you, John. So tell us about the company and what you're doing at FM.
Sure. FM is one of the world's largest commercial and industrial property insurers. We were founded in 1835, so we have nearly 2 centuries of experience protecting our clients' businesses. As a true mutual company, we're actually partners with our insureds in protecting their purpose. Businesses have trusted us to deliver comprehensive risk assessments, develop robust property insurance plans, and foster engineering-based solutions that help protect them against fire, natural disasters, equipment breakdown, and more. We're proud to protect many large mining businesses across the globe and bring deep technical knowledge when it comes to protection and risk mitigation, which is where my role comes in.
And what are you doing at the company?
I started with FM nearly 25 years ago and had several roles in the company. In all of them, I worked directly with the mining industry, whether doing field-based engineering work, standards development, research, training, even loss investigations. My current role with FM is the principal engineer for the mining and molten material industries. So I'm responsible for all of our engineering globally, including in making sure we align with both our clients' needs and our underwriters' needs. Currently, we have close to 200 engineers in the program who are specifically trained to support these industries. So work with research a lot to make sure our standards are in place for current hazards like conveyors, but also future risks like lithium-ion batteries, autonomous equipment, decarbonization technologies, etc.
Okay, excellent. And conveyors are an issue. What is the deal with conveyors and what is the concern with conveyors?
When we look at mining sites, you see a lot of big, complex pieces of equipment. But at the end of the day, mining is a gravity-driven process. Everything we do revolves around moving the material to the top of our process and letting it filter through. So the conveyor is a critical piece of equipment for that. It's the only way we have to get our material to the top of the process so that it can flow through and be processed so that we can turn those rocks into money. Effectively, at the end of the day, we can't pump rocks. And because of that, the conveyor is typically our only solution to get that material into the process.
Very interesting. So what is the most important thing then to know about conveyor belt fires in mining?
So if we look at our recent 10-year analysis, FM identified nearly 200 instances of property loss related to conveyor systems. So fire was absolutely the leading cause of loss. The second was actually wind. And third was mechanical breakdown. So conveyor belt fires pose a significant threat because they can cause significant operational downtime. Like we said, you can't pump rocks, so you're reliant on the conveyor to get the material to the top of the process so that you can process it through. They're critical for transporting ore, and a fire can stop their capabilities. One thing that's often missed when people think about conveyor fires is they don't realize that frequently when a conveyor fire occurs, it's not just a replacement of the belt. It actually leads to a complete collapse of the whole conveyor galley, which then requires complete reconstruction before you can return to operation.
Very interesting. And so how big of a deal is it then when the conveyor belt is taken out by fire? Like, what is the impact on the rest of the operation? Do things come to a halt? What happens?
Depends how much redundancy you have in place or contingency plans. But for most mining operations, there is a conveyor belt somewhere on their site that represents a single point of failure that will take them down completely and shut down their operation. So again, if we have that fire on a conveyor or a wind event that leads to collapse and we're down, rebuild times are typically 3 to 4 months. So if we look at a large gold miner, for example, the exposed business for 3 to 4 months of 100% shutdown can be hundreds of millions of dollars.
That is amazing. So, what other operational and maintenance practices are overlooked that are critical for preventing these conveyor belt incidents? It sounds like they're important.
They certainly are. When we look at critical conveyors, the ones that are critical to your production, we have to look at fire protection. One thing that a lot of people don't understand about conveyor belt fires is that the ore on the belt doesn't actually matter. The loss history is the same for belts carrying combustible ore, like coal, or non-combustible ore, like iron ore. There have actually been a number of specific incidents around the world in recent years with huge conveyor fires in the iron ore industry. So it's important to understand that even if your ore is not combustible, the actual hazard is the rubber belt itself. So that's critical from a fire perspective. Other than that, housekeeping is probably a biggest issue. Excess buildup of material on the galleys can not only create friction points that can then cause ignition of the belt, they can actually overload the conveyor galley. And we see numerous events where the conveyors were overloaded due to inadequate housekeeping, resulting in collapse of the conveyors, or in situations with high winds when they're overloaded, that can actually cause wind damage as well.
And is this also as big of an issue in, say, colder climates, or is this primarily, warmer areas?
One other thing that's critical for conveyor belt fire protection systems is making sure they're designed appropriately for the climate that they're in. In colder climates, like most of Canada, there's also a risk of water freezing in the sprinkler pipes. So we have to make sure we design them from the beginning for that freeze hazard. So we design systems that are dry, meaning that the pipes are full of air. And so they don't activate and fill with water until a fire actually occurs. And so that way we don't have to worry about freezing the systems in those cold Canadian winters.
Very interesting. So, what is hot work and why is it a prevalent cause of fires with conveyor belts? And what do you recommend for managing it in the context of conveyor belts?
Sure. Hot work is any operation where we use heat to make a change or repair to a piece of equipment. So that can be grinding, it can be welding, it can be using a torch, any of those items in order to do an operation or a change or maintenance to a piece of equipment. So for conveyors, a lot of the time they're in tough environments. Moving rocks is not the easiest job. So over time, things get beat up and things get worn out and have to be replaced. If you have a bolt that's stuck, instead of taking the time for penetrating oil to seep in and coming back, maybe someone grabs a torch to cut it off. Or maybe you have to make a repair to a crack in a structure and you end up bringing out the welder. So basically, the risk of hot work is that it's an ignition source. So you bring an ignition source into an area that doesn't typically have a lot of ignition sources, aka your conveyor galley. And now all of a sudden you have the potential for setting the belt on fire. So it's important to have a really well-developed hot work program so that you make sure the operators who are doing hot work will first look at other ways. Is there mechanical repairs that can be done, cold mechanical repairs that prevent the hot work? But if the hot work is necessary, and it frequently is, it's well managed. They have fire extinguishers. Maybe they've laid out fire hose. And most importantly of all is that they have a fire watch. Because when we torch off that bolt, it can potentially fall somewhere. And once metal is red hot, it can stay hot for a long time. So you can have ignition of something, of combustibles, of the belt itself after the hot work is complete, because you could have that hot bolt, or you could have slag or something else that's hot and sitting there. We add that with a little breeze coming through there, and it's pretty easy to get a fire going. So it's important that there's somebody doing a fire watch while the hot work is ongoing, and that they stay there after the hot work is done for a period of time to make sure that nothing ignites afterwards.
And how important is contingency planning in minimizing downtime after a conveyor belt failure? And what does an ideal plan look like?
So contingency planning is crucial. You have to look at the risk of the actual conveyor to determine what the right contingency plan is going to be for you. If you have a fully enclosed conveyor and you pretty much need a sprinkler system inside. But if you have a sprinkler system, you're going to be limited to very little damage. Typically, you'll just have to replace a section of belt and move on. If you don't have fire protection in place, you now need a workaround for that conveyor. Because if it's an enclosed conveyor, it's likely to collapse. If it's an open conveyor, you're still going to damage your rollers and your drives and everything else. So you have to look at workarounds. Now, for many conveyors, workarounds are possible, whether that's using portable conveyors, rental conveyors, or maybe you can move your haul trucks and have them deposit the material in a different area. So those sort of things can be great ways to work around a conveyor, but a lot of the time they aren't possible. And then you have to kind of work back and figure out what is an acceptable risk for your business. And that may lead you to decide that sprinklers are the only option because they're going to minimize your downtime. Like we said, a collapse of a conveyor galley after a fire can be 3 to 4 months to repair. The downtime after a fire, when you have fire protection in place, is typically 4 to 8 hours.
Incredible. So it makes a huge difference. And so as we wrap up here, John, can you tell us a little bit more about the research FM has done and how businesses can prepare their operations against the risk of conveyor belt fires?
Absolutely. So FM is a huge research entity, and we go way back with conveyors and with mining. In 1967, the U.S. Bureau of Mines actually came to us and asked us to do the research on how to protect conveyor belts because they were worried about the exposure in underground mines that a fire would create to the employees in underground mines. That really got expanded in 1972 after the Sunshine Mine disaster, and that was a loss of a lot of lives, and combustibles in the mine played a big part in that. And so we really came out with our original guidance after that. And what we saw over the years is that when we have sprinklers on the conveyor, that we effectively have no damage to the conveyor galley itself, and we just have to replace a little bit of belt. So it's been very successful. But about 5 years ago, we decided it was time to revisit the research that we had done, and we actually did some more modern fire tests. So we constructed a full conveyor galley in our research facility. It was about 100 feet long, 30 feet high, and a pretty decent incline. And we did actual full-scale fire testing of different protection schemes. And so what we found is that we actually can use less protection than we previously required. And so we can space our sprinklers out further, and we don't need to design the system for as many sprinklers operating. And that may not sound like that big a deal, but it actually makes a big difference in terms of our ability to retrofit sprinklers to existing conveyors. Because when we have fewer sprinklers flowing, we require less water. When we require less water, we require smaller pipes. Therefore, we're putting less weight onto the conveyor galleys. When we have less water, we need smaller water supplies. So you maybe don't need as big of a water tank or a fire pump. So there's a lot of cascading things that came from that research that actually make it far easier now than ever to go back and retroactively protect your conveyor galleys from the rubber belt fire hazard.
Very interesting. So if people want to learn more, this sounds like something that could be easily overlooked. What should they do? Where should they go?
They should go to our landing page for the mining industry, which is at risk.fm.com/mining.
John Nelson, FM's principal engineer, mining and molten materials. Thank you for joining us and sharing everything that you're working on at the company.
Thanks, Adrian. It's been a pleasure.
And thank you once again to FM for sponsoring this week's episode of the Northern Miner Podcast. If you want to learn more, visit www.fm.com. Turning to the website, India's NMDC explores critical minerals acquisition overseas. This is Reuters via mining.com. Indian state-owned miner NMDC on Tuesday said it is exploring acquisition opportunities for critical minerals in Africa, Australia, and South America as part of its global mineral diversification strategy. On Monday, the country's largest iron ore miner opened a Dubai office that will track mineral sector developments in Africa and Australia and focus on scouting mineral assets and conducting due diligence, it said in a statement. In April, NMDC chairman Amitava Mukherjee said the miner was looking at Africa for lithium, iron ore, copper, and cobalt, as well as exploring coking coal assets in Indonesia and Australia. Last year, India's Secretary of Mines, V.L. Kantha Rao, said that NMDC and Coal India were exploring lithium mines in Chile and Australia. So India on the hunt for critical minerals. We saw that FT article earlier that China has ramped up its acquisitions, the most since 2013. Continuing on, India to woo foreign copper miners, expand ties. This is Reuters via mining.com. India on Friday unveiled a series of steps to increase copper output, including encouraging foreign firms to set up smelters and refineries in the country in exchange for state-owned firms investing in their overseas mining operations. The government policy document, part of which were first reported by Reuters last week, said India, the world's second biggest refined copper importer, may have to import 91 to 97% of its copper concentrates by 2047. We saw that story last week. And scrolling down a bit, the document, which called for supply diversification and foreign asset acquisitions, also confirmed that India plans to promote investments by foreign companies, including Chile's state-owned Codelco and Australian miner BHP, as part of its long-term focus by 2047. Reuters had first reported, quoting sources with knowledge of the matter and the document, that India could likely approach the two companies to set up domestic smelters, refineries, and other downstream industries. So, front and center. It was the top of the agenda for India, is what we learned last week, and another story. India sends geologists to Zambia to explore copper and cobalt deposits. This is Reuters via mining.com. India has dispatched a team of geologists to Zambia to explore copper and cobalt deposits, two Indian government sources said, as New Delhi steps up efforts to secure critical mineral supplies essential to its energy transition. The Zambian government this year agreed to allocate 9,000 square kilometers to India for the exploration of cobalt, a key component in batteries for electric vehicles and mobile phones, as well as for scouting copper, which is widely used in power generation, electronics, and construction. The exploration project will last for 3 years, and most of the analysis will be done in laboratories in India, one of the sources said. The team is expecting to make multiple visits over the course of the entire project, said the sources, who declined to be identified because the information is not public. After assessing the mining potential, the Indian government will seek a mining lease from the Zambian government and may also invite private sector companies to participate in the project, the sources said. India's Ministry of Mines did not respond to a request for comment. So lots of interest in metals coming out of India. Continuing on, Vital launches mine finance fund as competition grows for metals. Bloomberg News via mining.com. Vital Group and Breakwall Capital have formed a credit fund targeting mining companies in the Americas as competition among traders for copper and other metals contracts heats up. Valor Mining Credit Partners will be managed by Breakwall and offer capital to companies looking to refinance debt, make acquisitions, and expand in other ways, the firm said. Breakwall, which spun out of Riverstone Credit Partners last year, already partners with Vital on another fund focused on upstream oil and gas. Mining companies are on the lookout for more funds as banks and equity markets continue to be wary of investing in the sector. Traders, meanwhile, have long provided the companies with upfront capital to help finish projects, often in return for secure supply. That's fast becoming a go-to way of locking in supply contracts as traders such as Vital, Mercuria Energy Group, Trafigura, and others allocate large energy trading profits into a slice of the increasingly volatile metal markets. Quote, we see a tremendous opportunity to bridge an unmet need in the marketplace, end quote, Breakwall's managing partners said in a statement. So energy looking to invest in mining. You're already seeing Exxon move towards lithium. You could see energy merging with metals in terms of the energy transition and, copper and everything. Continuing on, Canada could financially back aluminum producers if 50% U.S. tariff persists. This is Reuters via mining.com. Canada has discussed offering financial support to large aluminum producers like Rio Tinto, impacted by a U.S.-led trade war, in the event that Washington's 50% tariff on imports of the metal persists in the medium term, the CEO of a key industry trade group said on Saturday. Aluminum Association of Canada CEO John Simard told Reuters in an interview that the early talks could help the sector in the event that Ottawa is unable to reach a planned deal with its key trading partner by July 21st. Quote, it's part of a larger discussion where everything is on the table, end quote, Simard said, adding that no decision had been reached. So Canada potentially looking to support its aluminum industry. Continuing on, Chile cuts mining permitting times by up to 70%. This is Cecilia Jamasmi at mining.com. So we're seeing it across the board here. They call mining a cyclical industry. It seems to be an understatement. Chile's Congress has approved sweeping legislation to slash permitting times for mining and energy projects, aiming to boost investment in the world's top copper producer and second largest lithium supplier. The amendments, which passed with 93 votes in favor, 27 against, and 17 abstentions, amends over 40 sectoral regulations and now awaits the president's signature to become law. The government says it will cut permit processing times by 30 to 70% without lowering environmental or regulatory standards. Quote, "This will allow us to substantially reduce permitting times while maintaining our regulatory rigor," end quote, Economy Minister Nicholas Grau said in a statement. The long-awaited overhaul responds to pressure from the mining industry and renewable energy companies, which argued that protracted approval processes were stifling billions in potential investment. In the mining sector alone, project approvals can take up to 12 years. Continuing on, Northern Dynasty in talks to settle EPA litigation. So Northern Dynasty, once again, we've been talking about them for years. This is by a staff writer at the Northern Miner. Shares of Northern Dynasty Minerals were still up by about a quarter of their value after announcing a potential settlement on environmental issues to advance its main pebble project in Alaska. The mine's developer stock was at $2.38 apiece, despite wider markets falling on Monday in Toronto, still the company's highest value in nearly 5 years. The company said it's in talks with the Environmental Protection Agency regarding litigation. It had filed 2 separate actions in the federal courts in March to challenge the EPA's role in blocking the proposed Pebble mine. Once built, it would be North America's largest copper, gold, and molybdenum extraction site. So after some tough years, it's looking like it's starting to turn around for Northern Dynasty. Very controversial project. Continuing on, Royal Gold to buy Sandstorm Horizon for $3.7 billion. This is Cecilia Jamasmi at northernminer.com. Royal Gold is acquiring Canadian streaming and royalty firms Sandstorm Gold and Horizon Copper in deals worth a combined $3.7 billion US. The Colorado-based company is to pay about $3.5 billion for Sandstorm in an all-stock transaction and $196 million in cash for Horizon. And we have a quote from President and CEO Bill Heisenbuttel, who said, quote, "Royal Gold will remain firmly positioned as a leading North American precious metals streaming and royalty company. The addition of the Sandstorm and Horizon assets will create a global portfolio of precious metals interests that is unmatched in terms of asset diversification, development, and organic growth potential," end quote. Shares in Royal Gold fell 9.7% on Monday in New York to $162.43 apiece. You always got to be wary of M&A with a hot gold price. And final few headlines here. China's PBOC keeps buying gold as reserves grow for 8th month. This is Bloomberg News via mining.com. China added to its official gold reserves for an 8th straight month in June as prices of the precious metal traded near a record high. Bullion held by the People's Bank of China rose by 70,000 troy ounces last month, according to data on Monday. Its gold reserves have climbed by 1.1 million troy ounces, or about 34.2 tons, since the current run of purchases began in November last year. So interesting there. Continuing on, iron ore price slides on weak Chinese demand. This is Reuters via mining.com. Iron ore futures declined on Tuesday as disappointing factory data and persistent property sector woes in top consumer China dampened sentiment. Warnings of lower prices from Australian authorities and expectations of softer seasonal demand added to the bearish outlook. Continuing on, Guinea bauxite exports up 36% on Chinese demand. This is Reuters via mining.com. Guinea's exports of bauxite, a feedstock for aluminum, jumped 36% to a record 100 million metric tons in the first half of 2025, driven by robust Chinese demand that offset declines from a regulatory crackdown, official data showed on Friday. Bauxite exports jumped from 73 million tons in the same period last year, with Chinese-controlled firms commanding over 60% of shipments from the West African nation's expanding port network. China's aluminum production climbed 4% to 19 million tons in the first 5 months of 2025 as increased infrastructure spending and a manufacturing rebound boosted appetite for the critical raw material used in aluminum production, data from its National Bureau of Statistics showed. China accounts for about 60% of global production of aluminum used in transport, packaging, and construction. So very interesting there. And finally, Nornickel lowers forecast for 2025 nickel surplus. This is Reuters via mining.com. Russian mining giant Nornickel expects this year's nickel surplus to be 120,000 tons, which is 30,000 tons lower than it previously thought, it said in a metals market review on Thursday. So are we beginning to see a bottom in the nickel market? So those are your news stories. Now let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. What is happening? Maybe it is the tariffs. Look at this. The U.S. 10-year bond is yielding 4.4%. That is up 0.2% on the week. The UK 10-year gilt is yielding 4.64%. That is up 0.19% on the week. The Italy 10-year bond is yielding 3.57%. That is up 0.13% on the week. The German 10-year Bund is yielding 2.65%. That is up 0.1% on the week. And the Japanese 10-year bond is at 1.5%. That is up 0.21% on the week. So 10-year yields jumping in the last week. I assume it's on tariffs. So interesting over there. Turning to precious metals, gold is trading at $3,337.80 per ounce. That is down $14 on the week. Silver is at $36.99 per ounce. That is up 55 cents on the week. Platinum is trading at $1,364.60 per ounce. That is up $27 on the week. And palladium is trading at $1,117.50 per ounce. That is up $16 on the week. Turning to industrial metals, copper is trading at $5.04 per pound. That is a penny higher than last week and still above $5. Iron ore is trading at $96.24 per metric ton. That is down 25 cents on the week. Aluminum is slightly lower at $1.17 per pound. That is a penny lower than last week. Lead is unchanged at 93 cents per pound. Nickel is trading at $6.88 per pound. That is a penny lower than last week and still below $7. Tin is trading at $15.29 per pound. That is 2 cents lower than last week, so edging lower. Cobalt is unchanged at $15.12 per pound. Lithium is higher at $8.72 per kilogram. That is 16 cents higher than last week and showing a bit of life. Uranium is trading at $77.40 per pound. That is $2 lower than last week, and zinc is lower at $1.22 per pound. That is 3 cents lower than last week. Zooming out, precious metals, particularly silver, platinum, and palladium, continue to move higher, and there does seem to be a bit of a catch-up move going on with gold, and copper also looking good at $5 a pound. Copper, silver, platinum, and palladium looking quite good in the last few weeks. Lithium also looking good. I mean, the question I'm starting to ask myself with copper above $5, and again, this action we're seeing in silver, platinum, and palladium, is are we at the beginning of what's starting to look like perhaps a stealth bull market? That is the question I am asking myself, but it's one I've been asking for years. So not financial advice, and do your own research. And those are your metal prices. Coming up, I'm very pleased to welcome for the first time to the Northern Miner podcast, Novagold CEO and President Greg Lang, who discusses the history of the company as well as his background running Barrick Gold North America, as well as his experience as head of Novagold, as well as the recent news of the company that bought out Barrick's stake in the project. So a new lease on life here for Donlin and Novagold. So a wonderful discussion with Greg Lang, Novagold CEO and President. I hope you enjoy it, and I will see you on the other side. guest today. I'm very pleased to welcome for the first time to the Northern Miner podcast, Greg Lang, President and CEO of Novagold. Greg, welcome to the show.
Thanks, Adrian. Appreciate you having us on.
I've been working at the Northern Miner since 2012, and I have seen Novagold and the Donlin project. I feel like that entire time on the periphery, there have always been these headlines. And so finally, with this big Barrick transaction that has occurred here in the last few weeks, there's finally a very good reason to just find out what's going on. So before we get into the big news, could you just tell us a little bit about, say, your background, how you ended up as president and CEO, and is that how Novagold got started with you, or was it around before? Give us a little bit of background on you and the company, if you can.
Adrian, I'm a mining engineer. I came up through the operations side of the gold business. I started working at the gold mines in Nevada in the early 80s when Nevada was first really taken off. Yeah, I've spent a lot of years in Australia, Canada, all over the world where they mine gold. I was a long-time Barrick employee. I ran their Australian business for 5 years. I ran the North American business for the last 8 years. I was president of Barrick Gold North America. And that's when I first became involved in the Donlin Gold project. And I think as I was, taking stock of where I was in my career, I was ready for a change. Have always been fascinated by the scale of the Donlin project. And I wanted to be on the side of the table that frankly had a lot more leverage. Small companies like Novagold are very agile. And I've worked for big companies my whole career, and it really was a refreshing change of pace.
Yeah, it's fascinating. You were at Barrick. So was Barrick involved in Donlin before Novagold, and then eventually it spun out? Or how did you end up from Barrick to Novagold? And of course, Barrick was just bought out, on their part of the Donlin project recently. So how did that all happen?
We're going back many years now, Adrian. Barrick got involved with the Donlin project when they acquired Placer Dome. And, shortly after that acquisition, Barrick had a unsuccessful failed takeover attempt of Novagold. And this resulted in some back and forth litigation. And the end result of all this fighting was the current 50-50 ownership structure at Donlin Gold. So the ownership was crystallized. The owners set about preparing a feasibility study. They completed that and then embarked on permitting. When I joined Novagold, Dr. Thomas Kaplan, who's our chairman and our largest shareholder, he and I met and talked about Novagold, and we set the company on a path where we wanted to focus it on the Donlin Gold project, make it a pure play. So we joined the company at the same time in 2012. We set about to restructure Novagold. We slimmed the company down. We spun out some non-core assets. One of them now trades as Trilogy Metals, publicly traded company, also operating up in Alaska. And we ultimately sold our Galore Creek project to Newmont. So once we announced the restructuring, we did an equity raise in 2012. And we've been living off of that raise up until recently when we completed an equity raise to fund our share of the acquisition of Donlin Gold.
Have you been CEO then and president since 2012 then?
Yes, I have.
Okay, excellent. It seems like it's been a bit of a tricky project. Like when I was looking through some of the headlines over the last, 13 years here, it seems like it's been kind of a stop and go project, a lot of uncertainty. How would you describe the last 13 years on your side?
Well, Adrian, describing 13 years is really a moment in time. But starting back in 2012, the owners completed the feasibility study. They authorized Donlin Gold to commence permitting, and Donlin did. And as you noted earlier, we've completed the federal permitting process a few years ago, and we're, substantially done with the state permitting. So I think, over those years, it's been an interesting time. Barrick has gone through a lot of changes, but we've always stayed the course and focused on Donlin, as had Barrick. Permitting is not the most exciting time in a project's life, but we stayed with it and we were quite successful, getting a joint record of decision from the Army Corps of Engineers and the Bureau of Land Management. So we were steadily advancing the project over the years. And Yeah, permitting is not all that exciting, but it needed to be done and it needed to be done properly. And it was. And, throughout that period of time, gold prices were, frankly, for a few years at a low level where you wouldn't have wanted to build a new gold mine and you shouldn't have built a new gold mine. But, roll the clock forward a few years. We've always engaged with Barrick every step of the way. About 5 years or so ago when they merged with Rand, we were continuing to work the project. We did a lot of drilling and other confirmatory work, really part of the new management team at Barrick. It was part of their due diligence. So we completed that. We saw gold prices, starting to move higher and to the level that makes the Donlin project pretty appealing.
And so in the recent transaction, Barrick sold its share. I mean, why do you think they did that? Like, was there any kind of obvious reason for it? Do you think they were just slimming down? We had a recent interview with Mark Bristow saying that the company was, slimming down. Why did this transaction happen?
Well, I think that's a combination of factors, Adrian, and some of, most of that question is probably best posed to Barrick. But, looking at the announcements they've made, the company is clearly focusing on copper and needed the funds to advance their, Reko Diq project in Pakistan and the expansion at Lumwana. So, and we further saw this highlighted when they changed the name from Barrick Gold to Barrick Mining. So I think the company is just, reprioritizing their product line. One thing I think that became apparent to everybody, particularly as gold prices were moving higher, we were, frankly, and it's in the public domain, we were frustrated that there was not a decision on updating the feasibility study. Barrick, over the last few years, was involved in the project, funded their share of acquisition. But we felt, hey, gold prices are now to the point where this makes sense to update the feasibility study and ultimately prepare for a construction decision. There's also pressure in Alaska. The underlying owners of the Donlin project are two Native Alaska corporations. Calista owns the mineral rights and TKC owns the surface rights. And I think they shared our frustration in that, geez, they were watching gold prices move up. They're watching Barrick on other things. And they just said, hey, please take this project forward. And if it's not something you're willing to do, why don't you get out of the way? And that's some of the background on how we came to an understanding with Barrick.
Okay, perfect. Very interesting. And in terms of the project itself, I mean, just so we know in a sense what we're talking about here, tell us a little bit about this project. Is it primarily gold? Are there other metals involved? How big is this? How big of a deal is this potential mine?
Donlin is a huge project. What we see today, it has about 40 million ounces total M&I resources and reserves. It's also got a pretty significant component of inferred material that needs a little higher drill density. And we've, started a program really to convert some of those resources to reserves. So Donlin is huge. And more importantly, it's located in Alaska in the United States. It's a safe jurisdiction. One of the foundations of the investment thesis behind Novagold is that assets in safe jurisdictions will ultimately command a premium. We're certainly seeing that in the valuation of companies like Agnico Eagle that operate in safe jurisdictions. The market is really starting to pay attention to the perils of political risk. And I think at higher gold prices, we could see mines get nationalized. We've certainly seen some of that throughout the industry. So I think it's really a great time and a great position for Novagold to be in. But Donlin, not just big, but it's also got fantastic grade at 2.25 grams per ton. It's one of the highest grade undeveloped open pit projects in the industry. It's a standard open pit mine, common flow sheet. So it really is big. And it's one of the really few strategic assets that are out there in the gold industry right now.
Yeah, it does sound like it's quite large when you look at the articles. And I was looking at an article from 2018 on the Northern Miner. It sounded like all the permits were in. I mean, is that correct? Like, is there anything, holding you back at this point other than, moving forward with this? What is the next hurdle for you now that you have a little more independence here as a company?
The permits are in great shape. In the United States, obviously, the most time-consuming part of the permitting process is the federal permitting under the NEPA Act. And, we completed that. We've got a joint record of decision from the Army Corps of Engineers and the Bureau of Land Management. And that was the first time two federal agencies have ever written a joint record of decision. And I think that really speaks to the cooperative manner that we have approached the permitting of this project. On the state side, the only state permit remaining is for the tailings dam. And the reason we waited on that is in the state of Alaska, the state administers structures like the tailings dam and other water retention structures, and they require final engineering and construction drawings before they will authorize the work to begin. And we've submitted the preliminary design packages and are working our way through that with the state. I think the state of Alaska is very responsive. It's not a permit that's on the critical path. And we anticipate having that permit well in advance of the feasibility study being completed. But having the federal permits in hand authorizes us to begin work at the site. So we really are, for the first time in years, the schedule forward is really in the hands of the owners.
Interesting. So, in a sense, do you feel like you can move fairly quickly on this? How do you see things playing out from here?
Now that the transaction is behind us, we're working with the folks at Paulson and the folks at Donlin on preparing the necessary request for proposal to hire an engineering firm or firms with relative experience to update the feasibility study. I think that's the most immediate, tangible step in the project's evolution. Is the feasibility study is stale. It's been last refreshed about 5 years ago, but the original study is very dated. So while the project as it was conceived has not really changed, there's been a lot of inflationary pressures on the cost side, and we want to, certainly get our hands around what it will take to build and operate this mine. But, at current gold prices, for the first time in many years, the margins are really opening up for the gold producers. And these higher prices will certainly significantly benefit the Donlin project.
Indeed. I mean, it is quite a run we've seen in gold prices. You mentioned John Paulson and Paulson Advisors. How did they get involved in this? I mean, I have read that John Paulson is a gold bull, if memory serves. How did they get involved in this?
John Paulson or his related companies, they've been a major shareholder of Novagold for over 15 years. So their involvement with Novagold and Donlin goes back many, many years. And John has also been you're right, he's a very much a strong gold bull. He's used to making big investments in the gold industry. He substantially bankrolled the Detour Gold project when it was being built. And as the project was struggling, John increased his stake in the project, and ultimately that led to his involvement and changes at the board management level, led to the project really working its way through its teething problems and ultimately getting sold. John's also involved in other gold projects up in Alaska. He's a major shareholder of Tower Hill Mines. He's a pretty significant shareholder in Perpetual Resources, which is an advancing gold project in the state of Idaho. So he's a very educated consumer, if you will, and certainly he's very bullish on the price of gold.
Okay, very interesting. And I was going through some of my emails looking up Nova Gold, and I was surprised to see that the 2023 email, a press release that Nova Gold had received $25 million from Newmont Corporation. Is Newmont involved? Are they part owners of the project as well? Do you have any sort of relationship there? What's going on with Newmont?
I think the transaction you are referring to pertains to the sale of our Galore Creek project to Newmont. When we reached an agreement to sell that project to Newmont, we were the 50% owners. Teck was and still is the owner of the other 50%. But we had a agreement with Newmont to sell the Galore Creek project to them for $200 million. And the payments were structured 100 on close, 75 after 2 years, and the final payment of $25 million is the one you're referring to. So we had a firm commitment to sell Galore Creek to Newmont for $200 million. And we also have a further contingent payment of $75 million that Newmont will pay to Novagold if they elect to advance the project.
And that is right. I do remember seeing tech in that email. And as far as the company is concerned, is Donlin, it's obviously the main project. Is it the only project?
Donlin is the sole focus of Novagold now. As I mentioned earlier, we spun Trilogy out into a separate company. We sold Galore Creek, and we had other lesser projects that we've since farmed out. So right now, Donlin is the sole focus of Novagold. We intend to keep it that way.
Okay, excellent. And we were talking about permits earlier, but zooming out a little bit, I mean, are there any environmental concerns with the Donlin project? How are you feeling about working with local communities? How is the environment side of things with the project?
The environmental impacts have been thoroughly analyzed with the permitting process through the EIS and related studies. We've also very actively engaged over the years with the communities proximal to the Donlin Gold Mine site. So, one of the biggest and most important things that the Donlin team does is work with the local communities so they understand what is happening with the project and that their voices be heard through the permitting process. Permitting in the United States it's frankly a very public, very open, transparent process. We know it well, and we successfully navigated that process. As far as environmental concerns, there's nothing unique about Donlin from any other large-scale mining operations.
And as far as you mentioned costs and just in general in the industry, we've seen, the costs of building a mine, cost inflation, so to speak, rise pretty dramatically since COVID. It does seem to be plateauing, but how do you see things? I mean, as you start to think about actually, building things out, do your eyes pop out of your head when you look at the costs, or like, how are you feeling about this?
Well, I think, certainly there has been inflation, and we track the various indices that would, have an impact on what it would cost to build and operate Donlin. The capital cost is the most important component to get right. There's many operations in like Donlin north of the Arctic Circle or further south, but in Arctic conditions, and we benchmark against those. So the main issue is not the operating costs, it'll be the capital costs. Donlin's got great grade, and the first few years the strip ratio is fairly low. So its cash costs are going to be, significantly under the industry average. But we're prudent people, and before we proceed, we want to have a bankable document so that we can finance the project. And to do that, we want to have pretty solid handle on the costs. Hence, the fact that we could see the next logical steps are to update the feasibility study, prepare for financing, and ultimately a construction decision.
Okay, excellent. And the infrastructure itself, like how far away is this? How remote is the location of the Donlin project? I assume there are roads, I assume there's power, but that's an assumption. I mean, what is the situation?
Well, Donlin is a remote site, and like most of rural Alaska, there aren't roads. Access to bring supplies, construction materials, relative consumables is all done on the water. Barges will be put together in Seattle, brought up the western seaboard, offloaded near a community called Bethel, and then transferred to the site by riverine barges. That sounds very complicated, but that is how materials are moved through most of Alaska because the state does not have any rail system. So Donlin is a remote site. It's about 300 miles due west of Anchorage, Alaska. So one of the biggest things that we will need to do is to establish the infrastructure at the project site.
Okay, excellent. And what does that entail? Are you going to build a road? Do you have any idea of what that might look like?
We will not be building a road to the Donlin site because all the materials will be brought up on water. And frankly, water is cheapest way to move bulk consumables and heavy equipment and supplies to the site. And then beyond that, we will build an airstrip at the mine. It will be a fly-in, fly-out mine. And the crews will, have a standard rotation coming in and out every 2 weeks typically. And we will operate it as a fly-in, fly-out. And when you look at Alaska, the Tex Red Dog mine way north of the Arctic Circle is similar. They have a seasonal shipping season, and the crews are all brought in by aircraft. And that's certainly very typical of the mines that operate up north in Canada.
Yeah, very interesting. And you mentioned the grade and how you're happy with the grade at the project. Zooming out a little bit, we often hear Mark Bristow talk about, how it's getting harder and harder to find good grades, whether it's copper or gold. What is your sense when you look big picture around the world on declining grades? Do you have a view on this subject?
Well, you look around the industry, and there's certainly a lot of data available. The average grade of an open pit mine throughout the industry is, right at a gram. So we're almost 2.5 times the industry-wide grade, and that's why Donlin has such competitive cash cost. You look at many of the new mines that have been brought up in recent years. Artemis project was recently completed. They've got grades well under a gram. Detour was grading about a gram. So people are building mines and making relatively cheap production at grades less than a gram. And that's what really distinguishes Donlin from many of these other projects that people have been quite successful on. And I think the grade in the industry certainly not going to start going back up because most of these new resources that have been discovered are substantially lower grade. So I think the declining grade is something the industry has faced for many years, and it's going to continue to decline, or at any rate level off. But it certainly there's not been any discoveries of any consequence that would suggest that the grade could be any higher in the future.
Okay, very interesting. And just in terms of the project, I mean, I assume you have a sense of whether it's going to be open pit or underground. What kind of mine is this going to be should it be built out?
Donlin has been very thoroughly studied over the years. It'll use conventional open pit mining methods. Life of mine, the strip ratio is about 5 to 1. First few years, the strip ratio is lower because the ore body basically outcrops. So it really is an ore body well suited to open pit mining methods. And the processing is fairly straightforward. We will float a concentrate, autoclave the con, and leach the output of the autoclaves. Very similar to several other mines that operate in the industry.
Excellent. Okay, and just as a final question here, as far as final thoughts, I mean, how do you see things playing out here in the next few years, and what do you want people to know about where the company is right now? Where do you see things? How do you see things playing out from here?
Well, I think you look at where we've been in the last few years, and that we were the 50-50 owner with Barrick. And, one of the drawbacks of a joint venture like that is neither party has operating control. And with Paulson coming into the mix and us taking up an additional 10%, we are now able to really push the project forward. In recent years, people have looked at Novagold and says, "Man, everything is great. You got your permits. What are you waiting for? Where is Barrick at?" Was always a common question that we would be asked. And I think we've certainly answered that question. Bringing in a new partner, and particularly one as well seasoned as Paulson, it really is transformational for Novagold. For the first time in many years, we have a pretty defined path forward. We're going to focus on updating the feasibility study. By the time we evaluate the proposals and award the work, we would expect the new feasibility study to commence late in the third quarter or early in the fourth quarter this year. And that's about a 2-year undertaking. So it's really an exciting time for Novagold. We've got a lot of news that we'll be bringing out in the coming months. Certainly the results of the drill program will be part of the news flow in the next few months, as well as the progress toward updating the new feasibility study. But having a partner that we are completely aligned with, it really is transformational for Donlin Gold. The folks up in Alaska have really welcomed Paulson advisors coming into the story because the project will be important to our Native Alaskan partners and will also be very important to the state of Alaska. So there's a lot of will to see this project go forward. And with transaction behind us, people are really excited about Donlin now. So it's a great time to be looking at Novagold and the Donlin project.
And just the final follow-up on that, I mean, how are you doing for financing? Do you feel like with Paulson involved and everything that has taken place, do you feel like you have the money you need to go forward? How are you doing on that side of things finally?
Novagold's always been, for a small company, in great shape financially. With the equity raise we completed, we raised the 200 million to pay Barrick for our share of Donlin. We also raised a little bit more money. So, right now we've got a very healthy treasury, approaching $150 million, and we've got sufficient capital to see Donlin's feasibility study through to completion.
Greg Lang, President and CEO of Novagold, thank you for joining us and sharing your thoughts on Donlin and your history here on the Northern Miner Podcast.
Thank you, Adrian. We appreciate the time.
Thank you once again to FM for sponsoring this week's episode of the Northern Miner Podcast. If you want to learn more, visit www.fm.com. And thank you also to Greg Lang for appearing on this week's episode. And thank you, dear listener, for continuing to support this program. If you want to help out the podcast, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.